So, hello guys, a very warm good evening to everyone. So, let's wait for a couple of minutes. Let's wait for others to join as well. So, once everyone joins, we will start. So, I'll have to introduce myself as well because there are some batches that have been merged. So, good evening, RT. Good evening, AM. Good evening, GA. So, yeah, I usually keep my camera off because the camera quality of my laptop is really poor. So, that's why. So, a very warm good evening, everyone. We will start in few minutes. Let's wait for others to join us. Yes, I am going to take session from now onwards. No, this will be your timing from today, not only for today, but from today, this will be your time. So those are, I guess, recorded sessions came. I guess you will get a recordings for them and you will be learning them from the self-paced modules. Although I'm not sure, you can ask your counselor for the surety about it, but I don't usually take those lectures. So today we are starting with financial statement analysis. So today we are starting with financial. Good evening, SK. Statements analysis. So let's revise our concepts about financial statements and let's get to the financial statement analysis, how a proper financial statement is made, how they are constructed, each and every thing about the financial statements we will try to cover in these sessions. Yes, the recording of the class will be uploaded on LMS. So, what are financial statements? The documents that give or provides, the documents that provides financial information about an organization are called financial statements. Okay. Now you might be wondering, sir, these are such practical concepts. Why are you going to the definition part of it? But my dear friends, when you are asked in interview, I have seen people, many of them are able to know the concept, are able to solve the problems, are able to understand the concept in the more practical way. But the challenge that they actually face during the interviews is about explaining the concept to the interviewer. So having the knowledge is one thing, and proving someone that you have that knowledge and showcasing that knowledge is typically a different scenario. So that is the reason why we will take everything parallel to each other and try to focus on theoretical as well as practical aspects to it. So the documents that provide financial information of an organization are financial statements. Now, what are the types of financial statements? Each and every one of us has at least heard the name of them. What are the types of financial statements? Very good. It's income statement, the second one is balance sheet, and third one is cash flow statement. Income statement is also called as statement of income and expenses. As the name suggests, income statement will give you that what are the sources from where you have generated your income, and the places or the sources where you have spent your income or spent your money. So that is your statement of income and expenses. On the other hand, balance sheet is also known as statement of financial position. Because it gives you the financial position of the company. Balance sheet is also known as statement of financial position because it gives you the financial position of the company. What are the assets that company own as of today is recorded in balance sheet. On the other hand, what are the liabilities that company owe? When it comes to asset, I use the word own. And when it comes to word liabilities, I use the word owe. So when it comes to assets, what are the assets? What are the things that company own are my assets? And what are the things that company owes to other or borrowed from someone are my liabilities? Cash flow statement is simply a cash flow statement. It records the inflow and outflow of cash. It simply records inflow and outflow of cash. So any doubts still here, guys? Any doubts? Any specific part I can help you out with? If yes, we would be happy to discuss about that. If no, can we move forward if you allow me to? Perfect. Let's go on. Let's start with the income statement first. Now, one thing about the income statement is, one very much important thing about the income statement is, income statement is for the period. Income statement is nothing but for the period. Now, what I mean for the period. For that, I'll have to discuss two important concepts. The concepts are, first one, financial statements. No, this is not a repeated class, SD, but I'm just trying to revise everything so that ones who have was the people who have forgotten it can just remind it. Okay. And also there are new people as well, right, who have joined us. Now, financial statements can be made as on date. It can also be made for the period. Now, what is the difference between as on date and for the period? What is the difference between these two terms? When I say as on date, as on 31st December 2023, when I say as on 31st December 2023, it records all the information since the inception of the company. It records all the information since the inception of the company till today. Till today, that is as on date, that is 31st December 23. So when I say as on, it has all the information about a company, about the financial information I'm talking about. So when I say as on 31st December 2023, the information that it reflects belongs to the period right from the inception of the company till today. So this was about as on date. There is only one date involved in it. That is 31st December 2023 and till 31st, right from the inception of the company till 31st December 2023, the information covered belongs to this period. Everyone clear with this? Everyone? The second important date is for the period. The second important type is for the period. Now, what is for the period? For the period is 1st January. Inception means when the company was started or initiated. First time when the company started, the date on which the company started its operations. That is inception. For the period is 1st January 2023 to 31st December 2023. Right from 1st January 2023 till 31st December 2023, this is for the period. This has a start date and an end date. So the financial statements that reflects the information for the period, the information that is reflected by the financial statement, which is for the period, has the information between these two dates, has all the information between these two dates, that is the start date and the end date. Now, why I'm saying so? It starts from 1st January and is valid till 31st December 2023. So the information reflected belongs to 1st January, belongs to days between 1st January and 31st December. Okay. Now, everyone clear with this concept? As on and for the period. Based on this, can you tell me what are the financial statements that are based on the as on principle and what are the financial statements that are based on for the period principles? What are the financial statements that belongs to the as on principle and what are the financial statements that belong to for the period principle? Okay. So we have our balance sheet as on. balance sheet is based on the as on principle. On the other hand, my income statement and cash flow statement is for the period. Balance sheet is as on and income statement and cash flow statement is for the period. Everyone clear with this? Everyone clear with this? If you want to take a screenshot of it so that I can rub this out. Those who want to take a photo or make notes of it, take a screenshot of this so that I can rub it out. Can I rub this, everyone? Okay. Okay, if you want, just give me a second. Okay. Okay, I've saved this although those who will need it, I'll give it at a once at the end of the lecture. But let me just rub this out. Because now you might be wondering why I'm rubbing this out. I can just start with the second slide, right? But I have to complete the concept of income statement. That is why. Okay. So income statement is for the period. So when we will read any income statement, when we are going to read any income statement, it will reflect data for the period. Let's say it's from 1st Jan 2023 to 31st December 2023. This is the financial statements practice. This is the financial year practiced in USA. In India, the financial statement starts from 1st April 2023 to it would be 31st March 2023. So this is the case in India, but in US, we people follow this as this period as the financial year. Okay, no worries. The concepts, the underlying concept still remains same. So without wasting much time, we will just go to it. Now, when I say it is for the period, the data that will be presented in income statement will belong from 1st January 2023 to 31st March 2023. The question is why? Why do we need to present income statement for the period? The question is, why do we need to present income statement for the period? And why do we need to present balance sheet? And this logic for income statement will also go for cash flow statement as well. So why do we need to present income statement and cash flow statement for the period and balance sheet as on a particular date? Okay. Received one response from AV saying to portray growth of the company. It could be portrayed through as on period as well. So I am assuming that AV is saying income statement is presented for the period to know that whether in year 2022, if you have made revenue or net income, let's say, if you have made the profit of 20 millions And in year 2023, you have made the profit of 30 millions. Whether you have grown on profits or not. So to measure growth, this is what AV is saying. I partially agree with him, not completely. This is not the only reason. SK is saying IS contains yearly income and expenses. Okay, I know that IS contains yearly income and expenses, but why? Balance sheet contains whole remaining assets or liabilities till the year. That is perfect. But what is the reason for that? Balance sheet reflects asset and liabilities which can be owned and owed only at a particular date. Okay. A balance sheet is live and updates in real time, although I'm not sure about it. Whereas statements report transactions that have completed. No, I honestly do not agree with you on this. Sorry, Neil. Sir, what is the full form of AV? Actually, AV is the name of the student. Actually, we are not allowed to take the full names. So what I do in my lectures to point out the student, I take their short names. Income statement is for the period because as we have to know month to month expenses as well as growth of the company and we have to represent it in the quarterly basis also. That is the case with balance sheet as well. We can present balance sheet on quarterly basis as well. That is perfectly fine. Anyone else who want to try or need time to think about it? Ever wondered why balance sheet balance sheet is for equity holders? Not really. No, I don't completely agree to you, but still take your time. Think couple of minutes. I would be very happy if anyone could think of an example or try to point this out through an example. PM, the question is, yes, Mohit, you can comment your question in the chat box as well. Just give me a second. Everyone, guys, everyone, I would request, please don't use Q&A box for asking questions. I won't be able to open multiple tabs. So just use the webinar chat as well. The chat option through the lecture is only. The question is KM, why balance sheet is as on date and why income statement is for the period. This is the question. Is it for tax purposes? No. For decision making, maybe help business decide whether they can generate profit by increased revenue or decreased cost. Maybe, yeah, one of the reason that could be one of the reason. But again, what is the logic? Okay, let's keep income statement aside for a minute and let's try to understand this. Okay, but before that, there are some new responses that I have received. Let's read out those. Because balance sheet represents company financial position from initial date to current date. But why does balance sheet need to represent it? That is the question. Balance sheet is as on date because on a particular date, what is the company position? Okay. There is liabilities in balance sheet which has to be carried forward as very good, very good. That has to be carried forward as on date, and in income statement there is only profit of the company. Although this is not the whole definition, but I got the idea, SD, and I am really happy that you were able to say that. We check company performance for taking debt where we can show yearly data for the period can be used. I'll come to SD's explanation and why I was overwhelmed by her explanation. I'll also tell that. But just give me a second. Let me read out all the explanation that was being given by you. For the period can be used for understanding business health for historical data for further actions regarding the capital introduction to evaluate financial performance of business. The range of period is required. Very good. Okay. Starting with balance sheet and taking examples for income statement. When I ask you, what is the turnover of your company? Turnover is nothing but yearly sales. This is a common question that every investors or every analyst asks to company. What is the turnover of so and so company? What is the turnover of your company? This is nothing but what is the turnover of your company. So would I be interested in the value? Would I be interested in the value? The amount of sales. Let's suppose you are in the business for last 20 years. You are in the business from last 20 years. Your company is in the business from the last 20 years. Would I be interested in the total sales value, sum of all sales value in the last 20 years? Would I be interested in that? Sir, from last 20 years, I have made approximately 3,000 crores of sale or 3,000 billions of sale. Would I be interested in that value? Would this value make more sense to me? Or in the last year, in the last financial year, we closed at 300 million. Would this be something I would be looking for? Would this be something an investor would be looking for? This is the latest data that I would be willing to look for. Latest 1 year data that I would be interested in as an investor. Everyone with me? Everyone with me? So year on year, let's say this is start of a cycle. This is start of a cycle. And then there is an end of a cycle. So this is 1st Jan. Then there is 31st December. 23, let's say. And 24, 23. Okay. So on 1st Jan 23, company will open its books of account with respect to income statements. And from 1st Jan 2023 to 31st December 2023, company has made 800 million of sales. Company has made 800 million of sales. After 31st December, there would again be a 1st Jan. So on 1st Jan 2024, company makes 10 million of sales. Company makes 10 million of sales. So what would the revenue represent on 1st Jan 2024? Would the revenue be 810 million or would it be only 10 million? Would the revenue on 1st Jan 24 would represent 810 million, that is last 800 million plus 10 million, or only 10 million if income statement is for the period? Again, income statement is for the period. So the period that would be the new financial year, 1st Jan 24 till to 31st December 24, correct? So on 1st Jan, my books of accounts has opened for income statement. It would start with 10 million. Then I would sum all the revenue that I have generated in the given period. So yes, most of you are correct. AB, are you getting this? Why it is only 10 million? Because this is income statement and this is for the period. And the period is starting from 1st Jan 2024. So are you getting this? That on every start of the date, on every starting date, there is a reset. There is a reset button that you would like to hit. And you would reset that and start again with zero. Start your calculation for income statement and cash flow statement again with zero. So on every start date, you are resetting what has been happened in the past and you are starting again with zero. Are you getting this? Are you getting what I'm talking about? Everyone, everyone, because when it comes to income and expenses, let's suppose someone asks you, what is your salary? or someone asks me that what is the CTC that a company provides you, that your company provides you. So would I be telling him everything that I have earned from that company in past 5 years? The total value would I be telling him the total value that I have earned in last 5 years, or would I be telling him the annual CTC? What would be the more appropriate measure? I would tell him the annual CTC, right? I would tell him the annual CTC again, because the salary is again an example of income. Salary is again an example for income for an employee. That is why in most of the cases they are not, until and unless they are that is a very naive company or started in its business in last 1 year. In that case, yeah, definitely income statement and cash flow statement would reflect the same period as of balance sheet. But in most of the cases, income statement and cash flow statement is for the period and balance sheet is as on date. Getting it, AV? Now, if the same case, in the same case, if I have, let's say, if I have, let's say, 50 million of assets. If I have 50 million of assets and I have bought a new farmhouse worth rupees 5 million. I had 50 million of assets as on 31st December 23 and on 1st Jan 24 I have purchased a new assets worth rupees 5 million. In this case, will I be adding this 5 million? If someone asks me what are your total assets, what are the worth of your total assets, would I be saying him on 1st January 5 million or 55 million? What would be the amount that I would be saying him? I would be saying him the amount of total assets, right? That is 50 million from last year and 5 million of this year, that is 55 million. Are you getting this, guys? Are you getting this? RT, Ravi, are you getting this? When you open new books of accounts for the period, so let's say if you entered on 1st Jan, on the New Year Eve, you won't forget everything that you owned last year, right? You will keep on adding in on everything that you owned till last year. You won't forget, right? What you owned till last year, what you owed from last year. Correct? Am I correct? Similar such example would be, let's say you are a board of director of your company. Let's say you are the board of directors of your company. You are a part of board of director of your company. You approve 5,000 CR loan, 5,000 crore loan. Okay. So till 31st December, till 31st December 2023, company had a loan outstanding amount worth rupees, loan outstanding, that is debt outstanding worth rupees 3,000 crores. Company had loan outstanding worth rupees 3,000 crore, and let's say the approved amount is not 5,000 crore but 500 crores. And in the next year, that is in the year 2024, during the year 2024, you raised 500 crores. You raised 500 crores. So when you will be making, or when you will be closing your accounts on 31st December 2024, will you forget about the loans that you have taken before this year, that is in the year 2023, worth 3,000 crores? Will you forget about this loan and mention in your books of account that my company only owes for 500 crores? Does that work? Does that work? Let's suppose you have taken 10,000 from your friend last year, and on the New Year's Eve, you have partied a lot, and now you want to pay the bill, and you take 10,000 more from your friend. In that case, will you say that today is the new year, I will only pay 10,000 to you? Will he not ask for the 10,000 that he gave you last year? So it would be cumulative, right? It would be cumulative. Everything from the past will be reflected in the future. Everything from the past will be reflected on the future in case of balance sheet, and in case of income statement, everything will have a reset at a given start date. Are you guys understanding this? Have you guys understood this clearly? Everyone? Perfect. Now, coming to the format. What is the information that income statements gives me? Income statement gives me about the income and expenses of my company. Okay, yeah, so you want me to explain it again. What part were you confused about here? Have you understood about what is as on? Balance sheet is as on. Income statement and cash flow statement is for the period. Have you understood this? AR, balance sheet is as on date. What is as on date and what is for the period? Now, why balance sheet is as on date is because when you take a new asset, it becomes a part of your old asset, right? When you took a new asset, let's say you took 5 million worth of land, and I asked you how much land do you own, and you owned 50 million of land previously, and you took a new 500 million land. You took new land worth rupees 500 million, and you owned 50 million worth of assets in the past. So if I asked you how much land worth of land do you hold, AR? How much worth of land do you hold, Arjun? In that case, what you will tell me, I own only 5 million, or will you tell me you own 55 million? What should be the right answer according to you? 55, right? So that is as on for me. That is as on for me. When I asked you, what is your annual CTC, AR? What is annual CTC? Because why this is as on? Because you have accumulated everything in the past. You have the cumulative data of everything in the past. Your past history is reflected. History is reflected over here. Now, let's say if I asked you, what is your annual CTC? So will you give me your annual CTC? And let's not say annual CTC. I asked you, what is your income? If I ask you, what is your income? So will you give me your income per year? Or will you give me the sum of all income, or sum of all cash, or sum of all profits that you have generated till today? Let's say you are 29 years old. So when I will ask you what is your income, will you be giving me the income value for the year, or will you be giving me the value that will be generated that you have generated in the last 29 years? You will obviously give me income per year. And that is because when you enter into a new year, there is a reset date where everything that you have covered in the past is deleted and you will be starting new. So are you clear with this? This was the idea over here, yaar. Yaar, are you clear with this? Okay, perfect. Now coming to the format part. What is the format of the income statement? Income statement gives you financial information about income and expenses of the company. Correct? Income statement gives you the information about income and expenses of the company. Now, how this information is presented to you and how will you be able to understand that information? So the format of the income statement starts from revenue, also called as sales, often referred as turnover. Yes, correct, AV, correct, you are correct. Next, we subtract revenue with COGS, cost of goods sold. Let's say I have a manufacturing unit. Let's say I have a manufacturing unit of tires, and I have sold 100 million worth of tires in the past year. What was the cost? What was the cost of manufacturing that 100 million worth of tires is my cost of goods sold. Everyone clear with this? What was the cost? What was the cost of what was the cost of manufacturing that 100 million worth of tires is what cost of goods sold is. If you guys want a 5 minutes or 10 minutes break, let me know in between. Otherwise, we will continue. Okay. So this is revenue starting with 100 million. Then there is COGS, that is cost of goods sold. What is the cost involved? Cost involved in producing that 100 million worth of tires that you have sold. So if I have sold something for 100 million, definitely I would have purchased it for much less. So if I am here to make a profit, right? I am here to make a profit, right? So if I have sold something for 100 million, I would have purchased it for less than 100 million. Let's say that amount is 20 million, taking hypothetically. That amount is 20 million. So what is the amount I'm left with? I purchased the good at 20 million. I sold that good at 100 million. What is the profit that I made? Everyone, what is the profit that I made? The profit that I made is 80 million. This profit that you get after subtracting your COGS from your revenue is called gross profit. What is it called? It is called gross profit. Is this the profit that I am taking away to my home? Is this the profit I am able to take it away from my home? Don't I have other expenses as well? What are those other expenses? Those other expenses can be marketing expense, marketing and selling expense. I have my transportation expenses, which is a part of selling expense. I have my marketing expense. I run ad campaigns. Then I have my electricity bills to be paid. I have my salary to give to my employees. I have a rent. That is my office and admin expenses. Office and administration expenses. So gross profit, marketing and selling expense. Now the line item that I'm left with is EBITDA. Yes, correct. But that would come in the later stage, Ravi. So I have subtracted my other expenses, that is particularly called as operating expenses, the expenses that I need to make to keep my company operating. That is my operating expenses. And after subtracting my operating expenses from my gross profit, I am left with EBITDA. Everyone, are you guys clear till here so that I can move forward? Everyone, please let me know. Perfect. Now, have you heard about this EBITDA earnings before earnings before interest, taxes, depreciation, and amortization? Earnings before interest, taxes, depreciation, and amortization. So as I said earlier, as I said, I have I had my expenses that I need to pay to my suppliers, that is my COGS. Then I had some operating expenses. But apart from these operating expenses, there are some other expenses as well. Like tax is one of those expense, interest is one of those expense, depreciation and amortization of are one of those expense. I'll come to each and every part. Just be with me, guys. Just be with me. Let me just complete the format of the income statement and then I'll come to every part. Earnings before, that is earning before excluding or subtracting interest, taxes, depreciation, and amortization. Amortization is what? What is amortization? Amortization is nothing but depreciation. Amortization is nothing but depreciation charged, depreciation charged on not only goodwill, but all the intangible assets. What is amortization? Amortization is nothing but depreciation that is being charged on intangible assets. So all of you were very curious to know what was depreciation. That is why just I wrote the definition of depreciation. But we will know what is the significance of depreciation in much detail. We will try to understand the significance of depreciation in much detail. Okay. Let's say I have purchased machinery to expand my business, to expand my production, worth rupees 300 million. Let's say I have purchased a machinery to expand my business worth rupees 300 million. The useful life of the machinery is, the useful life of the machinery is 10 years. Now, this 300 million, what is the logical thing to do? What is the logical thing to do? Should I represent this 300 million as my expense? Let's say this purchase I have made in year 2023. So what is the logical thing to do? Should I represent this 300 million as my expense for the year 2023, or should I represent this 300 million expense in 10 equal parts every year for the next 10 years, starting from 2023 till 2030. What is the more logical thing to do? Everyone, please cooperate. What is the more logical thing to do according to you? Should I represent this total expense of 300 million only in the year 2023, or should I represent it in 10 equal parts? Most of you are saying that it should be represented in 10 equal parts except AV. So again, AV, coming to your point, you say that this 300 million should be represented as an expense in year 2023 itself. Correct? This is your point, correct? Let's say I have revenue in the year 2023 of 100 million. Let's say I have revenue of the year 2023 as 100 million. And as you are saying, represent this as expense. So I will subtract this expense from my income to calculate my profit. This is what we do. We subtract expenses from my income to calculate the profit. And the income that is coming to me is, so whether it is a net profit or rather than using the word income, I will subtract the expenses from my revenue to calculate profit. So the profit that is coming to me is minus 200 million, correct? The profit that is coming to me is minus 200 million, correct? Every one of you. So whether this minus 200 million is a profit or is it a loss? Guys, whether it is a profit or it is a loss? AV, whether is this a profit or is this a loss? Now, according to AV, this should be represented. So not only about AV, not only this is about AV, those who feel that this should be represented in the year 2023 itself, here it is a loss for 200 million. But the benefit of this 300 million, will be received by year 2023, 24, 25, up till year 2033, correct? Don't you think so? The benefit of this 300 million will be received to the company by 2023, 24, 25, every year till year 2033. Everyone, correct? AV, do you agree with me? The benefit of this 300 million will be received by the company every year. So don't you think this is injustice to the year 2023 to put all the burden as expenses of minus 300 million? Don't you think it is wrong? Because every year the company is going to receive the benefit of it. And when you will look to the profit and loss statement or income statement, you will see that there was a loss in 200 million. But was 200 million, does that mean 200 million was a bad year for it? Sorry, 2023 was a bad year for the company. Does that mean it was the bad year for the company? No. So there should be fair representation of what is going on. And based on that, this 300 million will be divided equally in the next 10 years. This 300 million will be divided equally in the next 10 years. And 30 million of expenses will be recorded, and you will clearly see what was the profit for the company. That would be 70 million. Yes, it would be the investment for the company. Yes, this was to make things simple. This was the example using a straight line approach of depreciation. Although we will see while solving numericals that what are the different approaches to depreciation. Okay, Neil. Now, this 30 million should be recorded as expense in your income statement. This 30 million that should be recorded as an expense to your income statement. This 30 million that need to be recorded as an expense in the income statement is recorded under the line item called depreciation. And what does the books of accounts gives logic to depreciation? Depreciation is the loss in the value of asset loss in the value of asset due to its wear and tear. Due to its wear and tear. So once, let's say you have purchased a car worth rupees 5 lakhs and you have used that car for running 10,000 kilometers, the car is not efficient as it was new. So since the life of car has reduced and the car has been subject to wear and tear, the value of the car will fall to 4 lakh, and this fall in value of the car, that is the 1 lakh difference, is nothing but depreciation. Everyone, are you guys there with me? Perfect. Where were we? We were on EBITDA. EBITDA. So once we have EBITDA, we will subtract that depreciation expense. And we will subtract the amortization expense. Now, what is amortization? It is just depreciation, but in case of intangible assets. It is same to depreciation, just in case of intangible assets. Now, if you want an example, I can explain it this way. Let's say you want to own a Burger King franchise. If you want to own a Burger King franchise, so you will have to take the license from Burger King to own their franchise, correct? You will have to take that license. Let's say you have taken that license. You have to, yes, not physically. You have to take a license, a document where Burger King permits you to run their franchise. Let's say that license is for 10 years and it costs you 10 million to own that license. It costs you 10 million rupees to own that license. Now you have run the business for 5 years. You have made a good profit out of it. And you feel that I don't want to own Burger King franchise anymore. I will open my own shop or open outlet. So what you can do is, the 5 years have been passed. The next 5 years are remaining. You can sell this license to someone else. What you can do is you can sell this license to someone else. And if you will be selling this license to someone else, will he be paying you 10 million for it? Will he be paying you 10 million for it? Definitely no. Because 10 million was for 10 million was for using that license for 10 years. For 5 years, the right price should be 5 million, or it should be any logical price but less than 10 million. Some might make use of time value of money, and it would be around 6 to 7 million, but not 10 million at least. Okay. So the reduction in the value of assets due to reduction in the value of intangible assets due to decrease in its useful life is nothing but amortization. So I hope you guys are clear with this. We are left with EBIT. What we are left with is EBIT. What we will do, depreciation and amortization are subtracted. The line item we are left with is EBIT. We will less interest. Now, what is interest? Let's suppose I have taken 200 million debt from you. I am paying you something back as an interest, and let's say the interest rate is 10%. So that is 20 million for me, and that interest, that is the interest expense for me. Once that interest is eliminated, I will be left with EBT. What is EBIT? Earnings before interest and taxes. Interest and taxes. No, this is not operating profit, but pre-tax profit. Pre-tax profit. EBIT was operating profit, right? EBIT is my operating profit. So EBT, earning before taxes, minus taxes would give me my final answer, that is net income. Net income. EBIT minus interest, EBT, earning before taxes, pre-tax profit minus taxes, net income, also called as profit after tax, also called as net profit. Clear, everyone? Every one of you, are you clear with this? Perfect. Just go through this once. Let me know if you have any doubt about this. One important thing, this revenue where my income statement starts from is called top line. This is called top line. Sure, I'll share these slides. This is called top line of my income statement. Whereas at the end, where my income statement ends, this is called the bottom line of the income statement. When you will read news articles or watch CNBC, Z Business, they consistently use words like there has been a hard hit on top line, there has been a hard hit on bottom line. What does that mean? That the top line has fallen, the top line has soared. It means that the top line has increased, the revenue has increased. The bottom line has soared. It means that the net income has increased. If they are saying there was a decline in top line, it means that revenue has fallen. If there is a decline in bottom line, net income has fallen. Often analysts use these words. Yes, these taxes will be calculated on EBT based on the tax rate prevailing in the economy. You might hear the analyst's presentation where they say that top line source for 8%, source from 8%. It means that there is an 8% increase. Top line had seen a hit of 3%. It means that there was a 3% fall. So all these things, being a part of the finance domain, you should be well aware about. So guys, do you need a break? Now you can take a break. Midway, some of the people were texting. that they need a break for 5 minutes or something. I could have not stopped midway, but now we can take a short break. Since we are take your time, EBITDA is earning before interest and interest, taxes, depreciation, and amortization. Top line is revenue. Revenue is the top line. Revenue is top line. Revenue is my top line, and net income is my bottom line. Okay. Sir, as on date means reflects from history to present, and for the period means deals with the income and expenses statement. Am I right, sir? Yes, you are absolutely right. With what respect do you want an example, SK? Tell me with reference to what top line. There is no need of an example. If you see that if the sales value for Reliance Industries in last quarter is 30 billion, in that case, analysts or someone from the news reporter from CNBC could report that Reliance has recently reported last quarter value for the top line as 30 billion. So this was the example. Okay. Uploading the sheets. Meanwhile, you can take a break of 5 minutes, but guys, be right back in 5 to 7 minutes. We have to start and move forward with the session. Take a break of 5 to 7 minutes and be right back. Be right back. Maybe can you please just raise a ticket about it and I'll reply to that over there. Those who are back, please let me know. Perfect. Shall we start? Let's start. Let's start. Okay. Now, out of the three financial statements, we are done with one. The second one is balance sheet. Balance sheet. Balance sheet is as on date or for the period. Balance sheet is as on date or for the period. It's as on date. So right from the inception of the company till today, everything that has been going on the company is balance sheet. Now the balance sheet has a unique equation. Can anyone say what is the equation of the balance sheet? What is that equation called? Balance sheet has an equation, and what is that equation called? It's called assets equal to liabilities plus equity. What are assets equal to? It's equal to liabilities plus equity. Okay. Why in a company this should be explained in a nutshell? Let's suppose if my company has 500 million worth of assets, if my company has 500 million worth of assets, this 500 million worth of assets should either be contributed by me, that is equity. If it is contributed by me, then it is an equity. So it should either be contributed by equity and the rest 200 million I would have borrowed from someone. That is my liability. 500 million if there are. Yes, MM. Anything I can help you out with? So if my balance sheet represents 500 million worth of assets, it should either be contributed by me, or it should either be contributed through the borrowings from someone, that is 200 million. Let's say the equity contribution by me is 400 million, and and the debt that I have taken is 250 million. So in total, it should be 650 million. It should be 650 million. But if it is still 500 million, where has the remaining 150 million? What is the application of the remaining 150 million of the funds? It means that there is a fraud or scam related to that 150 million of funds. And that is the reason why it's very much important. It's very much important that our balance sheet should match. Right from childhood, we were very much concerned about how to match our balance sheet, how to match our balance sheet. But the significance and importance that why you need to match the balance sheet is what the idea was discussed over here. Yeah, it is called double entry bookkeeping system, where every entry has its same effect on the other side as well. So we will get more in the depth of it when we will solve the numericals. Now, the items of balance sheet are classified into two types. The first types are assets. Again, something that you own. The other type is liability. Something that you owe or borrowed. Now, both assets and liabilities have two types each. My current assets and fixed assets, also called as non-current assets. Same goes with my liability as well. I have my current liability and I have my non-current liability, also called as fixed liability. Hardly fixed liability is the term used. It's often referred as non-current liability only. Current assets are those assets that will be in my balance sheet for less than 1 year, for less than 1 year, or less than one accounting cycle, or one business cycle. Rather than accounting cycle, I would say one business cycle. On the other hand, current liabilities or non-current assets are those assets that belongs to my balance sheet for more than 1 year. Similar is the case with current liability and non-current liability as well. Now, why I mentioned this special word, business cycle? It's not always about the period. It's also about the intent. It's not always about the period. It's also about the intent. Let me just explain this to you with an example. So, can you give me the examples of current assets? Those who are at least from a commerce background or the management background. Can you give me the Examples of current assets. Okay. Debtors and creditors, you are saying. This is again something that I get very much confused with, but it's account receivable, cash, inventory, machinery is not the example of current assets because you are going to use machinery for a longer period, and that is why it is an example of fixed assets. Fixed assets start with property, plant, and equipment. Yes, prepaid expenses is an example of current assets. Property, plant, and equipment. Okay. Now let's say all of you said, guys, any one of you have any doubt in any of these terms? What are debtors? What are cash, inventory, property, plant, and equipment, land, machinery? Yes, marketable securities. Any one of you? Okay, debtors. So let's suppose AV, I own a business and you are my customer. And if I have given goods to you worth rupees 2000 on credit, you owe me 2000, right? That would be a liability for you. But that 2000 will be an asset for me. Why? Because I have given 2000 of credit to you and I am expecting you to pay me back. So the amount that I am expected to receive are called debtors or accounts receivable. Again, debtors and creditors are something that is used in India. I find this totally confusing. Rather, the word that should be ideally used is account receivable or accounts payable. Accounts receivable is something that I'm expected to receive from my customers. Yes, yes, that is sundry debtors we are talking about. And accounts receivable and payable, the word itself says if I am expecting it to receive it, it's account receivable for me. If I am obligated to pay it, it's account payable for me. So everyone clear with this? Debtors, creditors, accounts receivable, payable, everything. Prepaid expenses, why these are assets? Let's suppose. So for that, we have an account of doubtful debt, sorry, bad debts. So if does not come, so business works on optimism, right? If I feel that I will not receive any money back from you, why will I give goods to you on credit? But if someone cheats me, my customer cheats me and they are not giving me back, I have a provision for doubtful debt or bad debt in that case. Okay. But in most of the cases, we feel that the customer will pay me back and that is why we give them credit. Yes, any wrong debit or credit, wrong debt given on credit, that is doubtful debt. Prepaid expenses. What is prepaid expenses? Let's say I want to renovate my home. And for that, I have selected SK to provide me interior designing services. But I am planning to do this 3 months later. And I have taken SK, I have paid SK 50,000 in advance to design my home. But I am planning it to get the service from him 3 months later. So till the period I have not taken the services, can I ask this 50,000 back from SK? The answer is yes, because I have not taken your services yet. I am planning to postpone this plan or change my supplier. So I can ask this back to you. So this is 50,000, which belongs to me. Who is the owner of this 50,000? Till the time SK has not provided with me the services, till the time SK has not provided me with the services, I am the owner of the 50,000. So this 50,000 belongs to me. So that is why it would be my asset. Once once SK has provided me with the services, I would record this as expense and it would go out from my assets. I would delete this from my asset and it would be recorded as my expense. Got this? Got this one, guys? Prepaid expense. Very much important part. Everyone else? Coming to the next point. Current liabilities and fixed liabilities. Give me example of current liabilities, guys. Easier one. Creditors, short-term loans, next, outstanding expenses, very good. Credit card payables and all the payables that I should be paying. I owe someone. Bills payable, correct. Borrowings, loans, same thing. Debt, basically. Long-term debt. Rents payable, everything that is payable that I owe to someone and have not paid yet. Rents payable are my liability. What if I have paid the rent? Once I have paid the rent, it is my expense. If I have lived the part, although we will discuss this in later, so don't get confused right now. Taxes payable, yes. Deferred taxes. Fixed liability. Long-term loans. Equity, a part of liability, yes. Bonds and debentures, that is instruments for long-term loans. And all these things. So this was about fixed liability and current liability. Loans payable, yeah, long-term loans. Coming to the next part that says cash flow statement. Cash flow statement. Yes, retained earnings, very good. Retained earnings, that is a part of reserves and surplus. Are fixed liabilities, okay? Cash flow statement, these cash flow statement gives me the information about my cash inflow and cash outflow. This can be classified, these cash flows can be classified into three types. Cash flow from operations, cash flow from finance, and cash flow from investments. What is cash flow from operation? The cash flows that are generated from operating activity. What is cash flow from finance? Cash flows that are generated from financing activities. And the rest are cash flow from investments. So, how do we understand that whether a particular cash flow belongs from cash flow from operations? So if the cash flow contributes to the core business operations, if the cash inflow or outflow contributes to the core business operation of the company. So if I own an FMCG company, what is the core business operation of buying and selling FMCG goods? To operate my business, to run my business, what are the cash flows involved? That will belong to my cash flow from operation, like rent, salaries, utility bills. Apart from this, amount paid to supplier, received from customers. Yes, cash flow statement represents the cash balance and its uses. Cash balance can also be checked in balance sheet, but the uses of cash, how a business is using its cash, is represented in a cash flow statement. Now, raw materials in credit, that is amount, raw materials taken in credit would be the accounts payable for me. So I will have to pay them. So that won't be the cash, but won't be in cash flow statement, but it would be in liabilities. Since I have not paid for it yet, when I will make that payment, it would be impacting my cash flow statement. Till the time it has not impacted my cash flow statement, I have not paid for it. It is my liability. Financing. Always remember, when it comes for the company to raise funds, that is equity, debt. These are sources of funds, and dividends that are being paid to equity shareholders. These are my cash flow from financing activities. Repayments of the loan. Yes, borrowing and repayment of loan or equity. Payment of loan, borrowing and repayment of loan. Shares issued or buyback. Dividends distributed. All these are part of financing activities. Now, what is investing activity? Investments of or cash outflows made on fixed assets. So any investment, purchases or sale related to fixed assets, those assets that I'm going to use in long term, are my cash flow from investing activities. So every one of you, are you guys clear with this? Are you guys clear with this, everyone? Please let me know. Perfect. Now let me just share this sheet to you and let me know if every one of you have received this. Just give me a second. Definitely, AY, I will explain finance once again. Just give me a second. Okay. So the sheet has been shared to you. It is being uploaded. Meanwhile, I'll explain you what is financing activities. So what is financing is, okay, just give me some time, guys. We will solve queries related to PDF later. But okay, I'll share it again. Just let me complete this again, the explanation part, and then I'll share it again. Don't worry. So I have received two responses, one related to financing activity, other one related to investing activity. Now, what is financing? Financing is basically arranging funds. Financing is what? It is nothing but arranging funds. When it comes to arrangement of funds, we call it financing. Okay. So how can be funds arranged? Either we can raise equity, you can sell your shares and raise equity. Either you can borrow it from someone, that is debt. If you are raising equity in future, you will give them dividends. So that is your financing activity. Apart from that, if you have taken debt, again, this interest part is little controversial. I will have to jump to US GAAP and IFRS. Different people treat it in different way. So we will come to it when we will be doing numericals. So let's suppose when I have raised equity, that is, I have sold my shares for money, then I will represent it in financing activities. If I have repurchased my equity, it means that I had sold it to someone, but I am buying it back. So that buyback will also be a part of financing activity. Similarly, when debt raised, it means that when I have borrowed, it would be part of financing. And when it is repaid, again, it would be the part of financing activity. So are you clear with this time? Uh, AY, are you clear with this? Perfect. Investing, any purchase or sale related to fixed assets. Any purchase or sale related to fixed assets would be would be the part of investing activity. So if you have purchased a machinery, a land, any property, any factory, that is plant, any equipment, that is popularly known as PPE, property, plant and equipment, then it is a part of investing activities. Are you clear with this, everyone? Now coming to the wait for a second. Let us see every one of you are getting the PDF or not. So yeah, the PDF is uploaded. Please check whether you are getting it or not, whether you have received it or not. Please check. Received? Everyone? You did not receive. I don't know why. Have you connected from phone, Reshmi? Probably that is why. So those who are connected on phone, probably you might not be receiving. How could I share it with you? Just give me a second. Just give me a second, guys. I will get it uploaded on LMS. Okay, the sheet will be uploaded on LMS. Don't worry. So don't worry if if it is not opening through the chat box, it will be uploaded on LMS and you can get it from there. Maybe that may be the case, but just give me a second. Let me upload. So no, I don't usually follow PPT, Manish. I'm really sorry, but the student reviews that I have received over these time, uh, student prefer to use people. I don't know, but student think that this is a better way. Using whiteboard is a better way. Moreover, I would like to know from you as well, reviews from your end as well, whether whiteboard is a better way of presentation or either should we use a PPT. What do you guys prefer? So I am open to suggestions. If you prefer PPT, I will try to have a PPT incorporated from the next class, but still. Okay. Now next thing. Okay. So PPT is like why I don't prefer it because it becomes somewhat monotonous for me and I like to incorporate. Okay. Few things that keeps it dynamic. Okay. Thank you. Yes, in whiteboard we can discuss in detail. That is also the case. So some of you are saying both is preferred. Many of you are saying that whiteboard is best. Okay. So we will try to incorporate PPT as well if we find a need to. Let's see what will happen. So I have shared 3 sheets with you. Guys, get those sheets downloaded. Are you able to see those sheets first of all? I have shared 3 sheets with you on Excel. Please get those sheets downloaded. Everyone ready with the sheet? Everyone. Now, open financial reporting mechanics. Sheets not received again. Those who have, just a second. Yes. These sheets will also be uploaded on the LMS. These sheets will also be uploaded in the LMS, although I have uploaded the sheet on the chat box for now. Yes, the Excel sheets have been posted on the chat box. So please get it downloaded. If you have joined through a mobile data, don't worry, it will be uploaded on the LMS. So you will see something named as financial statement analysis, and there you will find notes. In that notes section, you will be able to see this sheet. Okay. Now, it will be uploaded. It will be uploaded by tomorrow or day after tomorrow. But if you have joined, and guys, please, I would recommend to join from both, if possible, mobile network and uh, phone as well. Or if you are trying to use just one, make sure that sheets are being accessible to you. The next thing, can you see my screen? You want me to share the PDF again? Actually, third PDF has everything related to PDF 1 and 2. So still, if you want me to, let me just see where I can find that. Today's date. I'll share with you all the PDFs. Figure it out on your own. Which one do you want to prefer? although the fourth one has all the notes. Okay, coming to this point, are you able to see the screen, everyone? Please confirm. Are every one of you able to see the screen? Perfect. Now, this is a small exercise that we will be starting with, where you will have to classify the accounts, classify the line items into different accounts. What you will be doing is you will have to figure it out whether this revenue should be reported as asset, liability, equity, income, or expense. What do you think about this? Take your time, take 5 minutes of your time. 10 minutes is remaining for the session. Take 5 minutes of your time where you should label it. If you find that asset is the answer, highlight this as asset. If you think that income is the answer, highlight this as income. Go to cost of goods sold. Think about it. What do you feel about this? Whether if asset is the answer, highlight asset. If expense is the answer, highlight expense. Profit on sale of investment. Yes, Urvashi, how may I help you? If you think income is the answer, highlight income or liability, any of your choice. So get done with this. Take 5 minutes of your time and then we will discuss this. Yes, Urvashi, how can I help you? You have raised your hand. Please write down in the chat box. So don't answer it over here. Take your time. Highlight on your own sheet. You have the sheet, highlight it on your own. You can also write it on the notebook. You can make these columns and write it on your notebook. We have enough time for it. It would hardly take you 5 minutes. No, those are those existing PDFs. Some of the people has not received it, and that is the reason probably we need to get it again. Yes, you can edit this sheet. There might be an option of enable editing. You will have to click on it. You might see an option of enable editing, and you will have to click on it to edit that sheet. Okay, take 5 minutes and let me know if you are done. Please comment done if you are done. Great. GA is done. Waiting for more responses as well. Swapnil is done. So two of the students are done. Pace it up, guys. Pace it up. Kirti is done. Very good. It's not Kirti, but it's Kriti, right? So Kriti is done. Okay, SD is done. Great. Lovely response from all of you. Manish is done. Ayush is done. Last 2 minutes, guys. Last 2 minutes. Please let me know. Urvashi, you have raised your hand. Is there anything I can help you out with? SK is done. AR, you are not able to open the sheet. Don't worry. If you are not able to open the sheet, probably your system might not be supporting through the chat box. You will receive this on the LMS. You will receive on it on the LMS by tomorrow, and then you can download it and practice it by watching the recordings. Would that work? So we have shared the sheet actually, and you will have to solve this sheet. We gave 5 minutes for to solve this sheet, and people were done in a couple of minutes. So PK sir is done. So if you guys allow me, shall we start? If you guys allow me, shall we start? Perfect. So turnover, sales, and revenue. What is the answer? Everyone. Turnover, sales, and revenue. What is the answer? Income. Very good. Very good. It is the part of the income statement and comes to the income part. Belongs to the income part. Cost of goods sold. Cost of goods sold. Cost of goods sold. Cost is expense for me. Cost of goods sold. It is an expense for me. Everyone. Reshmi, are you getting this? Cost is nothing but expense, right? Perfect. Profit on sale of investments. Profit. Profit are my profits are my income. Very good, guys. Very good. Salary costs. Salary costs. Expenses. Expenses. Very good. Advertisement cost. Expenses. Advertisement costs are my expenses. Accounts receivable. Receivable, something that I am about to receive. Something that I am about to receive. It is an asset for me. Very good. Current asset specifically. Very good, guys. Advance rent paid. Advance rent paid. Rent paid in advance. If I don't use the flat, I can take it back. So who is the owner of that rent till I have not used that property? Who is the owner of the rent? I am the owner of that money till the time I have not used that property. So that is why advance rent is an asset. More specifically, a short-term asset, correct? Deposit paid again. Deposit paid. I paid 50,000 to you as deposit. Who is the owner of that 50,000? I am the owner of that 50,000 that you have, and that is an asset for me. Salaries payable. Salaries payable. I will have to pay it in future. Liability. Very good, guys. Salaries payable. I will have to pay it in future. I owe to my employees the salaries that should be paid. Liabilities. Rents payable. Rents payable liability. Very good. Share capital raised. Share capital raised. Equity. Equity. I have raised the capital. I have raised shares. That is common equity. Working capital loan. Loan is my liability that we need to repay. Depreciation. Depreciation. Expense. We saw depreciation in case of income statement. Depreciation is an expense, but accumulated depreciation. Sum of total of all the depreciations that has been occurred till now. That is my accumulated depreciation. Accumulated depreciation. Depreciation is for the period, but accumulated depreciation is the sum of all the depreciation happened till now. As on date, accumulated depreciation is as on date, and that is why an contra asset. Again, it is an example of contra asset. What is contra asset? Contra asset is something that reduces the value of an asset. Contra asset is what? It reduces the value of an asset. So it is contra asset. Amortization. Amortization expense for me. Property, plant and equipment. PPE. It is an asset for me. PPE asset. Reserves and surplus retained profit. Profits that have been retained part of equity. Retained profits. Equity is a part of liability, and that is why it is a part of equity. We discussed that as a fixed liability because equity was the part of fixed liability. But retained profits is something that the business owes from its owners, and that is why liability, working capital, current asset minus current liability, inventory, current assets. Inventory is my current assets. Advance received from clients. I am liable to offer my products, so liability. So match your answers, guys. This was the answer. Match your answers, get it matched. So that was all for today. I hope you enjoyed the session. Please let me know about your reviews for today's session. Revenue is an income because when you receive the revenue, you are gaining something, right? So revenue is your income, SK. Thank you everyone. Advance received from clients. We have just received the advance, but we cannot record it in income as far as we have not provided it with the services. So let's say, Ravi, till that I have taken 1,000 from you in advance. And if I don't offer you the product, you will take 1,000 from me back, right? So who is the owner of that 1,000? You are the owner of that 1,000. And if you are the owner of that 1,000, it is a liability for me. Correct? Sure. Thank you, guys. Thank you, everyone. Thanks a lot. Thanks a lot. It was really great while interacting with you. Really an overwhelming session. Thanks a lot. Thanks a lot. Let's meet tomorrow as well. Sure, SK, but that is possible on Sat. Let's see. I'll reply to your ticket. It is possible on Monday or else tomorrow. I'll reply to the ticket. Let me know about your preferred timing, by the way, SK, for tomorrow. Are you comfortable from 2 to 3 or 12 to 1? Okay, I'll share the link for 12 to 1. Okay, thank you. Thank you, guys, everyone. Thank you, guys. Bye-bye. Yes, tomorrow the timing is 6:45 to 8:45 as usual. And the timing will be 6:45 to 8:45 from now onwards. Thanks a lot. Thanks a lot. Good night, everyone. Yes, I will be the one covering financial modeling as well. Okay. Thank you, guys. Good night. Good night. Have fun. Bye-bye.